Welcome out to Tackle Trading's Trade Master. This is your coach, Matt Justice. I am excited to be here with two amazing coaches, amazing traders, and wonderful contestants for the Trade Master crown for the week of July 7th, 2021. Excited to have the great architect, Tyler Craig, with us today. Tyler, how you doing today?
Boy, I'm doing fantastic. I got three really good picks and excited to have you judging today. I trust you'll make the right decision.
I don't know if that's the standard you want to establish right now, but I will go with it. Coach Greg, Gold Money Holmes, how you doing, my friend? Glad to have you on Trade Masters.
I'm doing real good, but I'm not going to suck up to you like Tyler did. It's not worth it for the win. I'm just going to win on merit alone if you're okay with that.
Win on merit alone. Well, since I haven't actually decided exactly how I'm going to subjectively decide the winner of today, we will go with it live like that. But yes, I do expect Team Tackle to show up and help me judge this. This is my first time judging you guys in Trade Masters. Excited to be here. And just by way of just putting it on your radar, guys, tomorrow night at 7 p.m. Eastern Standard Time, yours truly, Coach Matt, I am going to be doing a webinar for our Tackle Trading YouTube channel. And I am very excited to talk tomorrow night about a subject matter that is very near and dear to my heart, and that is technical analysis and the identification of pattern truly, Coach Matt, pattern recognition. Doing a webinar take for that mute there, but pattern recognition. And so get excited tomorrow night, guys. We're going to go through a webinar where I'm going to teach you guys how to identify patterns in the stock market. Patterns have a tendency to repeat themselves, and so I just want to show you a couple of the visuals of what you're going to experience tomorrow night with Tackle Trading. And anybody that knows Tackle Trading knows we love those visuals to help you guys understand the concepts we are trying to teach. But before we get into that tomorrow night, let's have some fun here in Trade Masters. Tonight, we're going to go through 3 rounds in Trade Masters. Round 1 is going to be a delta trade. And so Coach Tyler and Greg are both going to give me their best delta trade. That is a directional trade. Round 2, we're going to get into theta trading and their best cash flow trade. Round 3 is going to be a wild card round. I basically told them, whatever you guys want to do, wow us a little bit. If needed, we will go to a round 4 to declare a winner. But let's go ahead and start with, who do we start with here today? Oh, yes, we're going to start with Coach Greg Holmes, Old Money Delta Dog. Wow us a little bit.
All right, man, I'm going back to the home builder well. I'm going to Home Depot here. This thing's been a juggernaut for me, and I just think that it's given us another opportunity here. We do have earnings coming, but it's not for a while yet. I like the space that it's at right now. It had its kind of beat down there. It had its reversal. It's up above the 50. It even got tested yesterday and bounced back real nice today, right up to a resistance level, right around the 325 level is what I'm seeing there. Like I said, it took a pretty aggressive pullback there, a few weeks ago, but it's been showing strength ever since. And I just really like where it's sitting right now. I like the round number of 325. I know that 324, you could make the case that that's a support, but I like to round off those numbers. But just the resistance at 325 there, and the nice kind of cup and handle pattern there, a little mini cup and handle we got going there. For me, this is an easy delta trade. The targeting is back up to that high there, the 345. Simple there. Not a hard trade here. Nothing fancy. Just basic, back to basics. Looking for a nice little move. We've got time between now and earnings. Well, what I like best on this one is a bull call spread. If I'm looking directionally, I want to. If I were at an all-time high here, I might just go with a straight option. But because we're back from that level, we will run into resistance. I'd like to trim the cost on this trade as well. I know for a lot of traders out there who don't have the larger accounts or don't have the max loss available, you want to make sure that you're playing within your means. So I looked at the August 13th, so 37 days out. No, we're going with a weekly there, Matt. So the reason I didn't do that is because earnings is on the 20th. Now you could have got away with that on the 20th. The other bonus here of what we've got going on is we're heading into earnings. So owning options going into earnings or having a debit spread, the influx of implied volatility is actually going to help our trade. And so typically that's kind of the cycle that we see. If that implied volatility continues to push up, then like I said, it's going to help our debit spread a little bit. So like I said, I looked at the 37 days out. It's a shorter time frame for a bull call, but the reality is this thing can get to where we want it to go well within those 37 days. No problem at all. So what I'm looking at here was the 325. So buying the 325 August 13th and selling the 340.
Okay.
Okay.
So you're buying the 325.
Buying the 325 is slightly out of the money.
Selling the 340.
Yeah.
Which
and that's
brings
going to
your net delta to 0.25, correct?
Yeah, I didn't even actually look at the delta.
It's about 27.
I know it came out to about $469 per contract. I think if my math was correct.
Yeah, you're offsetting about, okay. Do you have any concern about the 330 resistance on the left shoulder over here?
No, not really. The ATR on this thing is around $5. And I think with a 1 ATR move, I think you get through there, especially the way it fell from the high there. It blasted right through that 330 like it wasn't even there. So I personally don't have an issue with it. I still think this thing gets back up to 340, 345.
Okay. Do you have any concern about the short time frame, 37 days?
Again, no. Like I said, it's we're poised right at that level. If you did the average pay range here, we can get up that 15. It's a $15 move essentially. So it's a 3 ATR move. In 37 days, it can do that very quickly. Obviously, as the days tick by, your theta is working against you. I totally understand that. But Home Depot is a mover here. I'm really not concerned about that at all. Like I said, the only reason I didn't do it is earnings is on the 18th, I believe, and then the expiration would have been on the 20th. Like I said, you could have rode that through. But then you would have had to close the trade on the 18th or earlier. I don't really like to mess with that. I'd rather be out of this trade before earnings myself. And
well,
so
that's kind of my
how I
question
look at it.
here. With the short time frame, obviously trying to get out before earnings to achieve your 340 price level, is this a make or break trade for you, or are you planning on some type of stop loss here?
Well, so for me, I don't mind risking $460. That's not an issue.
That's where my question was getting into.
Yeah.
Because your short time frame before earnings, it's kind of like I'm willing to either take it or lose it.
Yeah. So for me, that's not a problem. For someone who doesn't have a pain threshold that high, right under the 20 MA there, if you look at there's a support level there. I would say right in the neighborhood of say 315, 310, anywhere in there. If you wanted to get out of that trade, your risk is quite a bit lower at that point in time. Let me just look on my own thing here. I've got this pulled up somewhere here. So you'd be risking at 315, you'd be risking about $330 to make 1,031 potentially. So you do have a good risk reward there. Again, maybe 330 is a little bit much for you. If it is, then I would say, you could pass on this trade. Personally, I don't mind risking the whole 469 or whatever the debit would be.
Well, the simple reality is if you're not willing to lose $300 on Home Depot, you shouldn't trade options on Home Depot.
100%.
Right. Okay. So in terms of that, all right. So Greg, your first pick is bull call spread structured at buying an option at 325, reducing the cost structure by selling the 340 strike price, which is technically accurate. Typically when you do sell a bull call spread, just a little bit of a pro tip, guys, you want to sell somewhere where you're targeting. That allows the management fairly simple. I like the overall trade structure. I do have some questions, but I do want to go to Tyler for his first Delta pick here. Tyler, Coach Greg started with the bull call spread on Home Depot, fairly conservative type directional trade here. What do you got for your first round pick on the Delta side?
Yeah, I'm going to match him with a bull call spread of my own. we are going to take a look at a little stock called Coinbase. Coinbase. All right, couple of things here on the technicals. We actually mentioned this in the halftime report today. As time has gone on, Matt, this stock has gotten better and better throughout today.
That had a good day, didn't it, Ty?
It did have a good day. So here's the thing. You can break down this technical pattern and you can say this is probably the second chance you've had to trade Coinbase bullish since it IPO'd. For most people, this is the first pattern that they would consider taking if they miss the initial breakout. Because to be fair, I don't know how many people look to buy the first breakout of a symmetrical triangle bottom. But to me, the character. Oh, go ahead.
Oh, I was just going to say algorithms. A lot of like personal traders miss those types of aggressive triggers.
Yeah, it is an aggressive trigger. You often wait for the trend to develop. So this, I think, is a little bit easier play than the breakout from a week ago. But just look at the change in the pivot relationship. This thing was making lower lows after its IPO, getting crushed. Then it went to making equal pivot lows. It held the prior pivot at 208. Formed a little symmetrical triangle. Then you had the lovely little breakout there on June 27th with high volume to boot. We like the increase in volume to confirm and to illustrate that buyers, big buyers, institutions are entering the fray. And then after you get the 2-bar breakout, you get you get a retest of old resistance. And it's like, okay, were they serious about this? Were they just joshing? Is this like a legit breakout? Are they going to support this? Or are they going to give it all back? And it was a one-off. Today and yesterday was essentially the test. Your higher high needs to be followed by a higher low. Else, it's not a bona fide uptrend. It's not really here to stay. So I think today sealed the deal. Look at the volume too. Nice declining volume. Their hearts weren't in it on the pullback, Matt. They were phoning it in. Their hearts were not in it. Some selling pressure, not a ton. And then today, big volume pop, buyers come back in. And in one fell swoop, the thing recovers what it lost over the last 3 days. So I consider today the trigger candle. I consider today the confirmation that this daily uptrend has legs, right? And ideally, you will get upside follow through. We will break through the prior pivot. You'll make a higher pivot high. Maybe it won't happen, but I think that today was put up or shut up time, and Coinbase put up. So the technical pattern, I think, warrants investigation and maybe building a trade around if you want to bottom fish here.
I will investigate the technicals of Coinbase here in just 1 second. However, before I break down some of the technicals, because I do like some of the technical patterns here, and I believe when you're after an IPO, being patient does oftentimes pay out, in my opinion. But you got to wait for that structured reversal, and you can't try to pick the bottom of something. So I will go into that here in just 1 second. But you said technically you were talking about why you like it, correct? You got the reversal, you got your increasing support level. From an intraday perspective, I find what Coinbase is doing fairly compelling here today. We were looking at Coinbase a little bit on the halftime report today, and it wasn't doing this, right? This is what you're kind of waiting for it to do. It was covering down here, and what you were seeing earlier today, and I think it's fairly telling, is it was trying to find that bottom following a rough open. So you had that rough open in Coinbase here today. It stuck the intraday bottom here, however, and I do feel that's fairly telling, because when you look at bullish retracements or flag-based patterns like you're seeing in Coinbase here, you have a very structured 30-minute chart trend line going down. You see that double bottom here. That's the market's indication that says support is being built here, but you still want to wait for the pattern to break. That consistency of this 30-minute trend line coming coming down is very telling. Once it breaks with supporting volume, that is the telltale sign that the market is ready to run. So you have your trade structured. I like the technicals behind it. Where would you be looking at management? Because unlike something like like Coach Greg's pick in Home Depot, where very conservative stock, very conservative trade, you're talking about a three ATR target at 340. You can get there in no time before earnings. I might like a little bit more time frame to allow management there. I'm typically do prefer more time frame than the 37 days, but I don't mind the trade. Here, though, we're dealing with Coinbase, not Home Depot. We're dealing with the big boy type option trade. Where are you structuring the option trade from the buying versus the selling, and where are you looking at a management from a management perspective?
Yeah, so one of the differences with Coinbase versus the Home Depot is cost is going to force your hand as to which strikes you pick. Stocks that have recently IPO'd, $250, like these options are expensive. They're very expensive. And so what you're going to have to decide is what's more important. So here's the way I structured it, and I'll talk about why. If you look at where the stock could go next, it can get to like 300 is the next resistance level. 50 points away seems like a long way, but I mean, Coinbase dropped for 3 bars and went from 300 down to 250 when it dropped back in May. So, if we take out the
trading days, like
it moves a lot. It moves a lot. So 300 to me, I think is the obvious next level if it wants to have a smooth follow through, but it's $50 away. So, do I really want to buy an at the money call and do a 50-point spread? It's quite expensive, and I think it prices a lot of people out. So my thought was buy the 250 call, which is essentially the at the money. $26. Nobody here wants to pay $26. Okay. Time decay, volatility fluctuation. You'll be down $500 lickety split if this thing has a down day. So to hedge ourselves, I want to sell a higher strike call. It would be stupid to do a $5 wide spread because it's just way too narrow.
Before we jump down that, let me make sure I'm in the time frame you're looking at. Are you looking at 44 days, 72, 163?
Yeah, my mistake. September.
I figured as much. I just wanted to clarify.
Yeah.
All right. So coming back, you're looking at an at the money call option, which is the 250 strike price that has a delta of 56.
Correct.
Now you're also looking at selling what you would feel is deep out in the money, but I don't feel selling a $300 strike price is deep out of the money on Coinbase. We're still talking about a stock with the 29 delta at that point, and so it's still like it's a fairly conservative target in my opinion for Coinbase. What one are you looking at selling here to offset the additional cost?
This is where Coinbase falls in the same categories like Amazon or Google. Yeah. If you're trying to structure a 25 net delta on something like Coinbase, Amazon, Google, you're paying a ton of money. So you can do it, but for most people, I think it's just cost prohibitive. You just can't. So I think an easier solution is shoot for 300, sure, but sell the 280, do a 30-point spread. Net delta is not going to be as high, but I think the cost is easier to swallow. It should be about $10. So I'm getting a 30-point spread for $10.
So you're paying about $25.90. You're selling against. You're going to get about 15. So yeah, you're in the $10, $11 range.
Yep.
You're in the $10 to $11 range. Your net delta is going to be very conservative, right? Typically, we are targeting that net 25 delta on a bull call spread. What Tyler's point is because of the volatility of Coinbase, you don't need to get the 25 delta to achieve what your financial goals are because of how quick it can move, right?
Correct. Yes. If you look at how much you make, if it just gets to 280, you're up like $400, $500, $600, even with that lower net delta. So, if you were looking for the stock to move $3 and you had a net delta of 10, there's no money there. But you're right. It moves so much, you can get by with the 30-point spread, lower net delta, still make good money, but not be forking out $1,500, $20 per contract, which I think prices a lot of people out.
Well, we got two bull call spreads for round one. Coach Greg came in with Home Depot with the trade structured around 325 versus the 340. It's a very traditional bull call spread. Coach Greg's applying some technical parameters, which we would just simply consider a breakout. Risk is under this 50-day moving average at 317. You're looking at a stop loss there. But Coach Greg says, I'm willing to risk it all going into that earnings date. That's a little bit aggressive, but perfectly fine when you know what you're dealing with in the options market. I do not have a problem with that. This is a very traditional bull call spread. Net delta 25, the only non-traditional aspect of this trade is the time frame in the trade. You are being a little bit aggressive on that, but I don't have that big of a problem with that. In terms of Coinbase, this is an aggressive trade. There is absolutely no doubt about that. It's an aggressive stock, and it's in an aggressive position in the history of the stock. We're talking about a high net growth stock that is tied to the crypto market that can be considered, and I certainly do consider Coinbase a proxy financial instrument to that of Bitcoin, which means you are going to have a little bit of the random news, but that's what you get when you play in this type of sandbox called Coinbase. This is what you've been waiting for, in my opinion, however, on Coinbase. We've talked about Coinbase quite a bit over the course of the last couple of weeks, from the time the breakout, from the double bottom to the breakout here. For people that miss, which is quite a bit of people miss this type of signal here, you always wait for that retracement. Love the front running approach here. Coinbase got the trigger with confirmation here today. With that said, I am going to throw it to the team after round one. So team, all I want you guys to do, community, is give me Tyler or Greg. Who do you think won round one? Who had the better bull call spread? The aggressive bull call spread on Coinbase, the more traditional bull call spread on Home Depot. I'll give them a couple, about 15, 20 seconds to respond there. I'll tell you, from my perspective, I am going to go to Coinbase. This is what I feel people that are patient with IPOs wait for. You wait for the right timing. And the right timing, in my opinion, is not simply because you want to acquire something, but because the visual identification leads you to desire that. And what I mean by that is when you're looking at this downward movement in price, you wait for that double bottom here. You get the confirmation of that double bottom here. You see the breakout. You see the higher high. You see the higher low. And then, if you guys will remember Marty the Elephant, the team mascot of tackle trading, Marty the Elephant. What does Marty the Elephant do when he holds that support level? He explodes off of that. You got to love the volume behind Coinbase. And this is not and again, I think it's way too often in our society that we think if one is good, the other one is bad. And that's not how it works in the art of trading or in life itself. Simply because I personally like Coinbase more than Home Depot does not shade the Home Depot trade. I will ding it a little bit from the 37-day time frame. That's a fairly aggressive time frame for Home Depot. I don't mind it, but it is a fairly aggressive time frame. The overall trade is structured fairly decently. Home Depot is tied to the economic cyclical areas of the market. We're seeing those areas start to form up right shoulder breakouts. This is actually above that. I don't see it having that big of an issue getting into that 340 range. So I don't have a problem with the Home Depot trade. I am going to score it a 6.5 out of 10. I'm going to give the Coinbase one a 7.5 out of 10. I'm giving round one to Tyler. Tyler wins round one. Now, I love judging that. How'd you guys like it?
I thought it was impeccable. I thought it was great.
I felt like Mark was here again. I got rooked again. I don't know how this always happens.
Well, let's listen. Simple reality is I've kind of already been all over that Coinbase chart for the last couple of weeks.
Believe me, I remember the conversation from the scouting report meeting. I knew I was in trouble as soon as he said Coinbase.
Once he said Coinbase, I think everybody in that's ever been in the halftime report is like, okay. Matt likes Coinbase. So it was a good one. I did like it though. But you know what? Theta is coming up here. But Greg, I hear you got some jokes, bro.
Yeah, I got a few here. So
Okay, now this is new for me here. Like I'm new as the host here of Trade Masters, and I'll find my my avenue here. But let's hear your joke. I'm interested. Make me
all
laugh.
right,
I'll give you a point.
I'm gonna start easy. I'm gonna start you out easy. Last week I got a little dark on Tyler and Mark. I don't want to do that right out the bat here, but my granddad has the heart of a lion and a lifetime ban from the San Diego Zoo.
Wait a second. Hold on.
It takes a while. That one's got to float to you.
I literally was just typing into chat, so I missed it. What'd you say?
My granddad has the heart of a lion and also a lifetime ban from the San Diego Zoo.
I don't know if I want to continue that joke. I do like it though. I do like it. Let's go into round two, guys. Tyler, you went second last time. A little bit of a little bit of an advantage going second.
Yep.
Let's snake draft this one. Let's have you go first here. On the theta picks. Now, guys, theta time. Now, any theta strategy, it has to be a theta strategy. All right? Got to be getting that positive theta here. Get that cash flow. Coach Tyler, what do you got for us?
Yeah, take a look at ARK, ARKK. The pattern. So for those that don't know, this is the ARK Innovation ETF. It's become very, very popular. Liquidity is fantastic. Trades a lot of shares every day. If you want one chart to be your proxy for growth stocks, I think this is a good one. A lot of momentum stocks in here. Got smoked from Feb to May, finally bottomed, and we've got a nice little start of an uptrend here. This, in my mind, is the first really easy pullback pattern since the uptrend began, because this is the first one that's transpired after ARK got above the 200, the 20 EMA, the 50 EMA, the 9 EMA, primarily the 200 and the 50 and the 20. So I like the retracement. I also like how it was preceded by an upswing that had increasing momentum. So the strength of the prior advance is one thing that makes me attracted to buying the dip. Everything dips, everything has pullbacks, but not all uptrends are created equal. And I like how bulls really jammed this. I mean, it went from 110 to 131, 132 before the pullback. That strength leads me to believe that there's a decent chance they show up and buy the dip in support of this newfound uptrend here. So the other thing that I like is there was a lot of momentum stocks that got smoked today. I like that ARK is still above the 20-day moving average. So as ugly as today was, down 2.3% in the grand scheme of things, it's still an acceptable retracement, pulling back maybe a third of the prior advance. So it's right in that bull area between the 20 and the 9 EMA. To be fair, there's a lot of stocks where I'd love to have one more candle. Like there's a lot of pullbacks today that had bigger red bars. This would be an easier sell on the timing if it had a candle like Coinbase. But as we always say, if you don't want to be late, you have to start to anticipate. You got to play chess. You got to think multiple moves ahead here. This is pulled back enough, Matt, where I want to map out a trade so that if the thing reverses tomorrow or in the next day or two, I'm ready to pass. Okay. Well, go ahead.
Yeah, I was going to, a couple things technically. Number one, really like the momentum here in the trends, and increasing trend momentum is a fairly decent indicator that dip is going to be gobbled up, because you have money flowing into it over time and not just in a single moment of time. And you do got to like that. A little concerning that the underbelly, as we categorize it at Tackle, right? The underbelly has not been participating this week. It just hasn't. And one of the reasons I like the Coinbase analysis so much today is Coinbase is tied to ARK. It's tied to that same degree of growth mentality, right? Same thing as Bitcoin is tied to ARK. And ARK got pretty beat up today. Beat up. Coinbase responded extremely well. That's what I kind of feel we're waiting on ARK for, right? Maybe not the explosion we saw today on Coinbase, but something into the lines of this. Give me a couple days of consolidation here. Show me that you can hold that support level intraday a couple days. I do think that's important when you're facing this type of candle. Now, you just might miss a V-shaped recovery, and let's face it, we miss trades, right? But that's what I'm looking for here on ARK. Would you agree with that, Tyler? Or do you think this is one of those candidates where you can pinpoint the support level and look at truly buying the dip here?
Well, I do agree with it. I will say that in scanning all the stocks in my list, sometimes when we have a discussion on Wednesday, there just ain't a pick that has that perfect doji reversal candle. And so in my scanning today, this was probably my favorite of the momentum crowd that had the deeper pullback because of the strength of the trend. So I definitely think there's room for preference as to whether you pull the trigger immediately, whether you wait for something a little more definitive. I wouldn't fault somebody at all for saying, give me one more bar, give me two more bars for pulling the trigger.
Well, and wouldn't it also suggest that if you're waiting on the Delta trade, you got to wait on that support level to really form up and give you that intraday analysis. Whereas when you're looking at a cash flow type scenario, as long as you got trend support and as long as you're in the zone of support, you should be fine.
That's actually exactly where I was going.
Yeah.
Because this is a bull put spread pretty far out of the money, my precision doesn't matter as much, got a little bit more margin of error than if I were to say, let's buy a call, right? I want to be a little more definitive on the timing on that. So, but still, I mean, I still would rather not sell a bull put if we're going to get another massive red bar tomorrow. So naturally, I'm going to be watching the open. I want some kind of intraday strength to give me the confidence to pull the trigger. So, So that's the technical read. And so the MO for me on selling a credit spread, this is a $120 stock. So I'm not going to sell a naked put on this. They're just going to tie up too much capital. So I think the decision to do a bull put is fairly obvious. The time frame is going to be August, not September. 44 days is, for me, the sweet spot for selling premium. So definitely going to stick to August, 44 days out. And I want to sell a low delta put, create a nice little spread that gives me at least a 10% return. And so I'm going to keep this simple, and we're going to be doing a $5 spread. And we are actually able to go all the way down to the 105 strike, about a 14 delta. You could sell that about $1.65 or so. You can buy the 100 for maybe $1.15. And then you're getting about 50 cents. I think right now it's like sitting at 49 cents. If you wanted to bump it up one strike, I guess you could. But I think I might be able to get this around 50 cents sometime tomorrow. I feel like selling a 14 delta, 86% probability of profit, getting about an 11% return. I like the numbers. And if you look at the chart, 105, this would not only have to continue selling off. This would have to break the 20-day moving average. This would have to break the 50-day moving average. This would have to essentially upend and reverse the entire trend that began in May. So I like the distance out of the money. That really is what seals the deal for me on this.
Okay.
Speechless, Greg.
So we got a bull put spread,
ladies and gentlemen,
in an environment of support.
Yep.
Can you guys hear me now?
Yep. We can. There was just a short delay.
Okay. My audio is working real quick. I had an internet burst. Okay. Again, just to repeat the trade structure, you have a bull put spread categorized at 105 selling. You're buying the 100. You're receiving $49 in credit. You have a 14 delta contract, correct?
Yes.
Okay. I'm just filling out the spreadsheet over here on the numbers, Ty. That's all I'm doing. Okay. Greg, What's your theta trade?
My theta trade, I'm looking at Cisco. So more traditional, slower moving stock. Technically speaking, I love where it is. So we're coiled up there with all the moving averages. It's above the 50 where I like. Those moving averages have come together. It's already had its reversal. It's starting to work its way back up. We're looking at a breakout trade there. Earnings is nowhere to be found, which is not a problem for us. I like the backstory of Cisco, you know, the plumbing of the internet. This thing's been pretty solid for a long time. We're past the dividend payout there, so that's not an issue. It's holding up pretty well. I just really like that when you get these moving averages, when they pinch together like this, there's usually a big move coming. And, you know, when that move comes, you know, I believe that it's going to be to the upside on this one, just if you look at the rest of the trend. So this one here is going to be a very, very basic trade. It's one that I like. I like these slower movers, these, you know, I don't know if you want to call it a blue chip, but just a more steady stock. You know, I don't like a lot of danger in my bull puts. So if we go to the trade tab there, Matt, I'm looking at the August 6th. I'm looking at the 51.49 bull put spread, 30 days out.
What strike prices, Greg?
August 6th, 51.
Okay.
Sell the 51 and buy the 49. So you're risking $2. You're going to get 10% of the spread, which is 20 cents for this trade. And the reason I like this the most is if you look at the weekly chart, we have a very important support level at 52.
Okay.
Okay. And so that's what I like is when you start looking at those longer time frames and you've got those support levels that are on those bigger time frames, you got to give it a little bit more weight. And so I really like the way this thing's holding up in, you know, even with the other, you know, we've had a few different stocks kind of getting beat up a little bit. This one's holding its own, and I think it's going to work its way higher. This one here, you're a 22 delta, so it'd be nice to get a 20 delta, but you still need to get that ROI. I personally like that ROI of 10%. You got a very low risk trade here. It's $180 if you just left it alone. You could use a stop loss. I don't really use stop losses on bull puts, but you could to reduce the risk even further there if you wanted to.
Okay. Now, Tyler, on ARC, you did a 5-point spread, and that felt natural to you. Greg, you did a 2-point spread on Cisco, and that felt natural to you. For people that have been around the markets for a long time, determining the distance between the spread is fairly natural. For new traders, though, it is not. That is a very significant question that a lot of new traders have regarding how far to open up that spread. Can both of you simply speak for a moment or two while I fill out the spreadsheet on your numbers so that I can detail it when we're going through the judging? Can both of you just speak for a moment on what led you to selecting a 5-point spread for ARC, and Greg, what led you to select a 2-point spread for Cisco? Let's start with Greg.
Yeah, for me, it comes down to risk, right? The further you spread, the more risk you take on, right? So when I look at this stuff, also the fact is that this isn't a big mover either. The ATR is 70 cents. So this doesn't. It's not an ARC. It's not going to move as much as a stock like that. So having a lower risk, you know, you're risking whatever the distance between the strikes is minus any credit you get. So for me, I like to control the risk myself. I am okay with the way this sets up being well below a weekly support level and only risking $180 a contract. That falls into my wheelhouse. Now, I could have looked at a 51.48. I could have looked at a 51.45, but then I would be increasing my risk on that trade. Although I would get more credit, I prefer to keep that risk as tight as possible while still giving myself the opportunity to profit from it. And in this particular case with this one, it all came down to minimizing the risk.
Awesome. What about you, Tyler?
Yeah, so you can get into like what is the optimal spread width. For me, I don't want to go too wide because to Greg's point, if I can get 50 cents on a $5 spread, for the $10 spread to be comparable, I would need $1 for a $10 spread. And on ARC, if you say, well, what if you did a 105.95, $10 wide, I wouldn't get $1. I get 90 cents or 80 cents. And so, widening the spread and doubling the risk has to come with doubling the reward. Otherwise, my return on investment is worse. So what you'll discover just as a hack or a shortcut is anytime you're building a bull put spread on a stock around 100, 125 bucks, just default to $5 and you're probably fine. You don't really need to do $10 spreads unless you're getting a little bit higher in price.
Like, and that we're like talking 4-digit type stocks. I mean, a $5 spread is good on Tesla.
Correct.
Yeah.
Correct. But you could, you get to 500, 600, 700, they're probably priced at $10 spread comparable to the 5. But in this case, if you were to run the numbers, you would see that the ROI is not as good on the $10 spread.
Well, thank you for that discussion, guys. Let's talk a little bit about both of these two trades. And let's first start with ARK here. Whenever you're talking about theta trades, I always give the analogy of zone defense versus man-to-man, right? Or the market assassin versus lobbing grenades, okay? When you're talking about delta, timing is extremely important, making sure that multiple time frames are aligned, making sure that the theme is intact, because we're talking about right or wrong. You are going to be right or you are going to be wrong. When you're talking about theta, it's not about being right or wrong. It's about being accurate on your system, making sure you're accurate on where, from a trend perspective, identifying the pattern. But you don't have to wait for the exact timing of things. And that's why a lot of theta traders love cash flow, is because while we're always constantly, you hear me say this in the halftime report all the time, we got to show a little patience here. We got to give this a little bit of time here. We got to allow this to cook a little bit. Well, that's all delta, and all of that patience really kind of helps the theta trader out, quite frankly. And so when you're looking at this from an ARK perspective, I got no problem waiting on a doji here, right? You're in the zone. Technically, you're perfectly fine. I got no issue with that. Tyler, you decided to sell and by the way, I do love the increasing momentum from a trend perspective. When you're looking at the option structure of the 105 by 100 bull put spread, and I got that structured in the Theta Research spreadsheet here, we're selling the August strike price with 44 days of time frame. You're selling the 105. It's got a delta of 14 and you're buying the 100 strike. So the first thing I want to talk is the 105 strike. Whenever you're making a decision to sell that strike price, obviously we're going to use our delta rules. You went between a 10 and a 20 delta. That's pretty standard. I also like to make sure I'm selling underneath a support level that I am confident in. And when you're looking at ARK for this trade, and again, you got 44 days, we're talking about a month and a half here, but for this trade to not work out, number one, it's got 86% probability going into it at expiration, but you got to violate the short-term momentum. You got to violate the trend. You got to violate the pattern. You got to violate the 20 moving average. You got to violate the 50-day moving average. You got to violate the 200-day moving average. You got to violate a major support level underneath all of that at 110. And so I'm looking at that 110 level, Tyler, and the only question I have here, because when you come back to the spreadsheet, there's nothing wrong with the trade. The trade is really, it's fairly traditional in its setup. You're waiting for the pullback. You're not chasing. It's very good. The only question I have is this. Your ROID, which is ROI divided by delta, is slightly lower than what I would typically like to look at. And so the only question I would have, and there's nothing wrong with this, this is not a negative I'm pointing out. I'm just pointing out that you could look at something else. When your ROID is low and your standard ATR is higher than the average, you could look at perhaps giving up a little bit of your range, sell the 110 versus the 105. And at that point, you would have a little bit higher cash flow. It would also have a little bit higher ROID as well, but your range, it would not be as good. Now, the reason I say I like that, I'm actually calling for a more aggressive bull put, shockingly. But the reason I call for that is I like the momentum in the short-term trend, and I really like how much support could form between the rising 20 all the way down to the horizontal 110 level. And so I personally feel if 110 is broken, it's going to go to 105 anyways, which means I actually prefer selling the 110, buying the 105. And again, that's just subjective. There's nothing wrong with the 105 by 100. Again, I don't want to come across as saying that is a bad trade. It is a fantastic trade. I'm just saying, you may look at, because of the 110 levels so strong, selling that 110, taking it in a little bit higher credit is all I'm suggesting. Does that make sense?
Dude, look, I love that you like the trade so much that you
I
want
went
to go
more
more aggressive. It's just
aggressive.
music to my ears. I wouldn't mind somebody going closer to 110. My MO is just a default to go as far as I can to get the 10% return.
Yeah.
If I had further optimized it, yeah, going a little bit closer is fine with me.
Yeah. So, that's just the way you and I were trained in, right? You were trained originally in 10%, 10%, 10%. I put a lot of emphasis on ROID. Like a lot of emphasis on ROID. My ROID has to be in the range, and I'm always tinkering with ATR distance versus ROID. And so when you see a ROID low and an ATR high, it's just a conversation I have with myself. Can I give up some of the range to maximize the trade? And the reason I like it on ARC, the reason I prefer it on ARC is simply because you have so much support here on ARC. You have 20, 200, 50, but what I'm really looking at is this double bottom right here at 110. You see that is a cement support level at 110. And so if you're going to see all of this coming down, 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 I just kind of feel if 110 is violated, 105 is 105 is nothing. It'll go to 100. And so I feel like if 110 is violated, you're still going to take max loss anyways. Take the bigger return is all I'm suggesting.
So just so I'm clear on the delta, if I sell a 14 delta and I get an 11% return, is that the numbers it's using for my ROID?
If you're selling a 14 delta and you're getting an 11% return, that's going to be a 78% ROID. But remember, the 78% ROID is based on the fact that you're selling 44 days a time and not 30 days a time. And so when you're looking at the spreadsheet here, you're seeing what I'm looking at is the standard ROID, which will compute the number to an average
over
of
30 days
time frame instead of the 44 days. And so when you're actually looking at these two trades here on Greg's Cisco trade, the 30-day numbers look pretty decent actually, because again, we're selling 30 days a time versus the on the other one we're selling 44 days a time. Does that make sense?
Yep.
Now, coming to the Cisco trade, Cisco, here's what I love about Trade Masters. If you know Coach Greg, his name is Old Money for a reason. Okay. And look at his two stocks. They fit his personality, right? We're talking Home Depot. We're talking Cisco. Go to the well because it does. If it constantly works, why change it? Right, Greg? Why change it?
You betcha.
He likes conservative. He doesn't want to deal with the volatility that something like a Coinbase or ARC is obviously going to have. You should not be, if you're going to trade Coinbase or ARC, you know the volatility you're dealing with. If you trade Home Depot, if you trade Cisco, much more conservative stocks, right? Much more conservative stocks. Here on Cisco, we got a structured bull put trade. We're selling the 51 by 49 contract. Greg, you're getting your structured 10% of the spread there, right? You're getting $20 versus the $2 spread. That's going to be 10% ROI. You're selling a fairly aggressive delta to get there, though, which you kind of have to do when it comes to a stock that has the volatility of Cisco. Once again, when you come back to the trade tab, you can kind of see what I'm talking about. Cisco has a volatility right now of 18, guys. I'm not even sure it has a heartbeat when it has a volatility level of 18 in this marketplace. It just doesn't move. When you come back to ARC, and again, this kind of fits the personalities of the different types of traders from Tyler to Greg. But when you come back to ARC, it trades at a 44% volatility. When you come to Coinbase, man, That thing trades at a rock solid 60. Tyler had to sell like a 36 delta just that's how volatile it is, right? And so the numbers you're going to see on Cisco are not going to be as good as the numbers you're going to see on something like an ARC or something like a Coinbase, simply because of the volatility. But you know what Greg's not going to have to do? Wake up at 3 o'clock in the morning and check the overnight news in China to see how ARC is handling stuff, right? Sometimes when we deal with that type of volatility, it does cause a little bit of additional emotion in us. I like both trades again. Okay. I like both trades again. Personally, I prefer the ARC trade. Personally, I do, because that fits my trading style a little bit more. But I love this Cisco trade because it just doesn't do anything. It's one of those trades you can put on and you still have a fairly high degree of confidence that you don't have to watch it. The only question I have here, Greg, is we're selling a fairly aggressive delta at 51, correct? And you
There's
said
a 22 delta, yeah.
Excuse me, at 51 strike price, right?
Yeah, it was a 22 delta.
22 delta at a 51 strike price. Have you given a little bit of thought, if you're going to do a bull put spread there, a diagonal spread might make some sense here as well, by the way, something horizontal calendar spread. But if you're going to do the vertical here, have you given a little bit of thought to sell the 50 strike price instead of the 51? Now, you would be giving up a little bit of your return there. There's no doubt about that. But if you did sell the 51 strike price, this sucker doesn't move. You're going to get a little bit of cash flow. But what I like about it is that 50 level is rock solid. That is a rock solid, significant whole number. It's got a double bottom here at $50 on an extremely volatile day in the stock market. It literally tinged to $50. I want that support level working for me is what I want. I want that support level working for me. And so the only thing I would suggest is perhaps looking at this a little bit technically, combining the options analysis with the technical analysis and identifying that level of comfort. Now, you might see that and see something completely different than I do. That's why we're traders, and that's why we talk, and that's why we have debates, and that's why we have a show that's called Trade Masters, right? Where we debate these principles. But personally, I do like the $50 strike price, just food for thought. From a scoring perspective, man, that was a lot for me to say. From a scoring perspective, we have this Cisco trade, 51 by 49 bull put. We have the ARC, 44 days out, 105 strike price sold, $100 strike price bull put. Two bull puts, one very conservative, one fairly aggressive, I would say. What do you guys say? Greg or Tyler? Now, what did I score? 6.5, 7 last time?
6.5. Yeah, 7.5 for Ty, I think.
Yep.
Maybe I can sway you with my joke. What do you call a pig that does karate?
Goldman Sachs?
No, a pork chop.
I was close. I should have said JP Morgan. I did like that, though. I did like that. And by the way, I know I'm a live program, but that was my sister's nickname growing up, and she does not like that.
I'm certain.
I don't think she's gotten over it with my dad yet. Right?
I'm sure.
Yeah. Let's see it. We got Jake coming in with the ARC. Everybody in tackle trading. Give me the ARC or give me the Cisco. What do you guys think? Personally, this is how I'm going to do it. If this was just for me, I do prefer the ARC trade. Okay. But from a complete analysis perspective, I do think ARC needs 1 day. I don't mind selling into the volatility for a lot of people, but you guys know how I am with the community. I want some confirmation here, at least confirmation for slowing momentum. And so, and Tyler, I get it, brother. I get it. A lot of times us Delta traders who put a lot of emphasis on technical analysis, sometimes live programming doesn't work out when we're looking at, oh, well, give me a doji tomorrow, right? Like Coinbase, we were talking about Coinbase today. Give it 2 hours. It looks really, really, really sexy, right? I'm gonna give the actual round to Greg. I did like the complete analysis, very conservative cash flow strategy. Don't need to worry about it. But again, I do like that ARC trade. I just want a doji. Just want a doji. All right, guys, we got 1-1 going into round 3. This is a wild card round where you guys can wow me. You can go Delta Theta, you can go Vega, you can go whatever your little heart desires, guys. We didn't decide who's going to go first here. We got to tie one. So I got one. I got how many fingers holding up? Odd or even? Tyler, you go. Odd or even?
Even.
Greg? 2.
Odd.
Tyler, you're up.
Okay. Here are the numbers I'm going to tease you with. I'm going to give you a 99% probability of profit of making a 20% return on investment.
Okay. Now, wait a second. Hold on.
Let that sink in for a second.
Hold on. A 99% probability. Now, Team Tackle, I don't know what stock this is. He teased me a little bit right before the show. I don't know what this stock is. He told me I was going to be extremely impressed based on this. And so 99% means we're selling a 1 delta, right?
Yep.
Not a lot of stocks have a 1 delta that have liquidity there, Ty.
Oh, this one does.
I mean, I'm interested. I'm excited. What is it?
Okay. AMC.
Okay.
All right. I'm going to take you down to the 10 strike for August. Well, and actually, let's make the case for the chart for a second.
Let's make the case. Make the case.
Okay. The case is this thing could completely unwind, go back to dribbling sideways at $10 for months on end. And so I think there is a theoretical bottom on this above 0, right? Like, I don't think this goes away. If you want to use GameStop as your template or analog, it's going to be volatile. There is a reason why they're pricing these the way they are. But when I look back at its prior history and I look at the price level around 10, I'm like, you know what? I think at a certain point, they've priced in so much movement that they've overpriced it, and it's a semi-tempting trade. Okay. Now, from a timing perspective, like, is this a gorgeous bull retracement type breakout pattern? No, this is not at all. It's not even like that, right? It's down 5 days in a row. Maybe there's some support in this area. Certainly you could wait for an up day. If it goes down another 10% tomorrow, this trade gets more attractive in my opinion. So I would like to see some support develop around that $40 range. That's been the range for the last month, 6 weeks here. I'm just impressed by the fact that I can go to a 1 delta, get that 99%, be so far out of the money that I don't have to be wrong. I don't have to be really, really wrong. I have to be like AMC goes bankrupt in the next 44 days. I feel like that's the type of profit range and margin of error they're giving me. So that's the technical read for me.
So your technical read is based on the theoretical probability of this company not going bankrupt in the next 44 days.
Yeah, and quite frankly, the chart doesn't look too bad. It's above the 50-day moving average. It's above the 200. I mean, the reality is I don't know that technical analysis applies to these meme stocks, quite frankly. So I'm not going to lie. Like, this is not based off of me having a super bullish read on the chart.
Just clerical point. It does have a negative price to book, which means it can go to 0.
Look, yeah, no, I know. And it could go to 3,000 too. So
going to 0 in the next 44 days is not going to happen, though.
Well, that's the thing, right? I'm not saying it ain't going to happen. It's not going to go down. I'm saying it's not going to go down percentage-wise $35 in the next 35 on a percentage basis. It's not going to go down 78% in the next 44 days. That's the bet I'm making. The market tells me there's a 99% chance of that not happening.
Now, you are looking at the 10 strike price, correct?
Yes.
Okay. And you are 44 days out, correct?
Yes.
And so 10 strike, the delta on this one is a 0.01. That truly is the 1 delta. All right. Now, Tyler, you're looking to own, or are you managing this?
With this type of trade, I would probably look to own.
Mm-hmm. I think you would have to. Now, what's interesting, and how much is our net credit we're getting? We're getting about 21, 22 cents.
21. If you look at the margin I think is $100.
It's right at 100.
Yep.
Okay, so net credit is 20, margin is 100. Now, here's your numbers. AMC currently trades at 45.07. The ATR is $6. We're looking at August, 44 days out. Tyler's looking to sell in the 10 strike price with 1 delta. Now, Tyler, I have not seen a few things in my life, and these are a couple things I have not seen because I've never filled out a bull put spread on AMC on the spreadsheet or GameStop or any of the meme high flyers, right? Number one, that number is ridiculous. Like truly astonishing. A 1,364 roid, 1 delta is ridiculous, but it's also accurate. Now, the kicker here though, Tyler, is that you had the exact same ATR range on ARC as you do on AMC.
Mm-hmm.
The difference is ARC only has to go down 20%, AMC has to go down 70%. This is the stock you're dealing with. This is a widowmaker trade if it doesn't work out. And it only needs to go down 6 days on average for that to occur. And so I like the trade in terms of the raw numbers. But I wouldn't do this trade with Coach Mark's money, quite frankly, because it's AMC. Now, for somebody like yourself, though, who is going to manage the trade, look to own it, and then write covered calls against, like boomerang style, I got zero issue with this. Zero issue. This is the 98% of the time, you're simply just collecting your check, right? You're just collecting your check. But I need to be clear with the community that this is not for the faint of heart. Looking at a stock price at $45 and selling a 10 strike price is a marathon away. But when a stock trades over 12% every single day, it doesn't take a lot of time frame for that risk to start showing up very aggressively, very quickly. And so I like the trade. For a pro, I have zero issue with it. These numbers are extremely impressive from a numbers perspective. You're getting well above on your ATR ranges. The roid is out of this world ridiculous because you're selling the 1 delta, right?
Mm-hmm.
But again, it only has to go down 5.8 days for that to be a risk, which means you're still in the same type of my point is it does not have to go down that much for it to actually show the ultimate risk. Greg, what about you? Wild card.
Yeah. So again, this is just the Tyler versus me. I'm going to go traditional with John Deere. I like the industrial space. It had a bit of a beat down. I think it's kind of stabilizing a little bit right now. What I like about John Deere and the other companies in this space, Caterpillar, things like that, we just had an infrastructure bill come out. They're spending a couple $2 trillion. I think companies like this are going to benefit from that. I don't know that this is going to happen immediately. So the way I want to structure a trade is I want to give myself both time and direction if I can do both. Now, the first thing that you'll notice is that the 50 MA is looming right over top of where we are. Mm-hmm. And I will be the first to concede that is an issue. But what I want to do is, because I'm going to be looking at a longer term trade here, what I want to do is go to the weekly if we can, Matt.
Now, excuse me, did you say the strategy you were looking at?
Not yet.
Okay.
Once I get to the weekly here.
Yep.
So you've got your 9 EMA there. Okay. We're right at that 9 EMA waiting to break out. You do have the 20 weekly there, which you do have to be cognizant of. But what I like about this long term is, like I said, I think companies like this are going to benefit from those infrastructure dollars. And I think that this had a pretty significant pullback, found a beautiful level of support right around that 325 area there, starting to show some life over the last few weeks there. Like I said, if you look at the industrial sector, it's starting to find its way as well. What I like on this is a diagonal spread. I want to be able to work this over time, and I want to be able to reduce my risk even if I'm wrong. Okay, so let's say the 50 MA, which we see on the daily chart, let's say that causes resistance. Well, the question you ask yourself then is it going to hit that resistance and drop down below this current channel? Or, is it going to cause it to go much lower? If that's the case, then this probably is good for you. However, if you think that it's going to hit that resistance, pull back, and then yet still work its way back up to that $400 level, this is where a diagonal trade would come in. So the diagonal that I like to look at here is the September. I want to buy the September 360. Now I do these, this is a bull call spread. I want to buy the 360, it's going to be 1285. Now I do these a little bit differently than most people I know. Most folks I know would probably start looking at monthly options. I don't do that. What I like to do here is I like to start selling about 2 weeks after I put on the trade. So if we go to July 16th and we sell the 365 bull call.
So let me just clarify real quick.
Yes,
so basically we're doing the diagonal covered call basically, right?
Essentially, yeah.
Where basically you're going to structure by buying 3 months of time in that zone, sell the short term against it, bring in that cash flow, correct?
Correct.
Okay. So again, very simple strategy, high dollar stocks, not great for covered calls. Instead of covered calls, rotate to the diagonal or the horizontal calendar, correct?
Correct.
Okay. Continue.
So, like I said, want to sell the 365 here. So if you can pull that one up for me, Matt, on July 16th. So you got July 23rd up there. I want to go back one expiration. So like I said, I like to go, the first one I sell, I like to do 2 weeks out. So I want to sell the 365 for just under $1. Okay. So I'm selling that for just under $1. That's going to take my risk from 12, I think it was 12.26 or so. That's going to take it down to 11 something. So now over the next, I have 9 weeks to expiration. So over the next 9 weeks, I need to be able to get $1 to $1.30 per week to offset my initial debit. That's if it goes nowhere. Okay. And so for me, that's kind of my default action on this is if it continues. What's that?
Are you selling every 2 weeks?
No, my first initial, because it's such a short time now, I went to the second week. I went to July 16th, but after that, I will be selling every week after that. So that leaves me nine weeks between July and September expiration. Okay. So like I said, when I start taking the debit and I divide it by those 9 weeks, I need between $1 and $1.30 per week in premium to offset the initial debit. That's to get it all back, right? Now, if this thing decides to continue sideways, which it's doing right now, I should be able to sell enough out of the money options that I can at least reduce that debit, not necessarily get rid of it, but reduce it to a manageable level. So if I'm wrong in the fact that it doesn't work its way back up to 400, but it just continues to trim sideways, which it essentially has since May, right? With the exception of that last dip there, it's really going sideways. I can still use the theta to offset my original debit. So with this here, management, it requires management. You are going to be selling every week. You are going to be collecting that theta. And the key to this is if we get the break above the 50, you're going to end up starting to do some rolls on this, which again, you obviously have to know how to do that. But I think that we have some real potential between 360 and 400, and we've got 3 months to get there. And like I said, the fundamental case of it is that we've got some investment, some infrastructure dollars that are popping into the economy. So I believe that they're going to get their share of this.
So basically, as long as we stay above 340 here, this is the cash flow for the next couple months for you. Selling weeklies against it, correct?
Yes, with the little bonus.
Get out moment on the call option you're buying.
Where's my get out on the call option I'm buying? I personally don't use one because the selling of the premium is going to offset my damage.
Okay.
That's how I reduce my risk.
Mm-hmm. Okay, so in round 3, wild card round, I mean, these two just stayed consistent all game long here. Tyler comes with ARC, Coinbase, and AMC. Coach Greg comes with, a bull call spread. I believe your first one, Greg, was on Home Depot. Then you went with the Cisco trade with the bull put on Cisco, and then you came in with the John Deere horizontal diagonal spread. Man, you two stay consistent throughout the entire game there. I really do appreciate that. And quite frankly, guys, thank you. Thank you for the analysis. I really appreciate the time, and I'm sure the community does as well. In looking at this, I'm going to judge collectively as a whole. And first of all, I feel both of you did a wonderful, masterful job presenting your cases here. However, I got to go with Greg here for the complete winner. The reason is very simple. Personally, Tyler and I are very consistent from a trading perspective. I love his picks. Absolutely love his picks until he said AMC. And then AMC is just a trigger word that makes me think Tyler didn't want to win because he didn't want to work next Wednesday night. That's what I think happened. I'm giving him the night off because that was well done there, Tyler. But Greg, I love the consistency of the cash flow. You earned the nickname Old Money for a reason. That consistency in cash flow, staying true to who you are over time, and not chasing not chasing every single next most amazing fad. It's really what's made you the coach and the educator and the investor you are today. Felt you stayed true to yourself here as well. Loved all 3 picks. And again, I'm going to judge things based on technical parameters, option strategies, rules. I'm going to try to be fresh and try to be clean. And try to take my own subjective mentality out of it. But again, I thought 5 of the 6 trades were good. And if it wasn't for AMC, Tyler, you'd be crowning it right now. But again, AMC, bro.
Listen, that Royd demanded a mention. All right.
I get it. It's sexy. Why don't you just wrap that bull put instead of the naked put I might have got there? But no, I loved honestly, guys, loved even the naked put on AMC. High probability with massive support. Just AMC's not my jam more than anything else. Greg, wonderful job here today. Tyler, fantastic breakdown on your analysis as well. I know I'm very grateful for it. Sure the community is as well. For Tackle Trading, Trade Masters, Coach Greg, Coach Tyler, and myself, Coach Matt. Guys, thank you for coming to Trade Masters. Coach Greg, you'll be our reigning champ next week as you take on some amazing challenger that will be named later. Coach Tyler, you get the week off next week. Outside of that, guys, thank you for allowing me to host for the first time Trade Masters. I hope to join you again next week. You won't be done with me, though. Tomorrow, pattern recognition, ladies and gentlemen, one of my absolute favorite topics. I'm geeking out on pattern recognition. Come join me tomorrow as we discuss pattern recognition, and I get to talk about constellation and stars and patterns. And yes, the high base, flags, retracements, continuation patterns. Congratulations, Coach Old Money Holmes. Tyler, congratulations on today as well. We'll be back next week with more Trade Masters, and I will be back tomorrow with a live mind.